It is a Wednesday, 9:47 a.m. You are sitting at your desk in the spare bedroom of your apartment. 2 monitors, a cup of coffee, a trading journal, open next to your keyboard, handwritten, 3 pages of notes from yesterday. The market opened 47 minutes ago. You have placed one trade, just one. You close it at 10:02 a.m. Profit, $940. You close the laptop. You go to the kitchen and make breakfast. You do not check the market again until tomorrow morning. That is your day. You are 34 years old. You manage a $400,000 funded account through a prop firm. Your cut of the profits last year, $198,000. This year, you will cross $200,000. You started at 28, 0 experience, 0 finance background, $3,000. This is not a lucky story. It is the story of every level you had to pass through to get here. Level 1, the gambler, age 28. Month 0, account $3,000. Income from trading, $0. You do not know you are a gambler yet. You think you are an investor. You work in marketing, $51,000 a year. You heard a coworker doubled his account in 3 weeks on Tesla options. A Reddit thread says a guy turned $5,000 into $80,000 in 4 months. You watch a YouTube video of a 24-year-old showing his brokerage statement from his laptop by a pool. You open a Robinhood account. You deposit $3,000 month 1. You buy 2 stocks based on tips from a subreddit. One goes up 8%. You feel it. That specific warm feeling of being right about something financial. You do the math quietly. 8% a month, 96% a year. You could quit in 18 months. Month 2. Both positions collapse. You buy more trying to recover. You end the month down $1,800. You close the account. You tell yourself trading is a scam. Here is the real diagnosis. You did not trade. You guessed. You had no entry rules, no exit rules, no position sizing, no stop losses, no edge. You had a tip and a feeling. That is the definition of gambling with extra steps. 72% of retail day traders lose money every single year. You just became part of that statistic. Most people stop here. They walk away and spend the rest of their lives saying the market is rigged. You are different. 6 months later, you are still thinking about it. Level 2, the student, age 28 to 29, account $5,000, income from trading $0. You come back, but this time, before you touch real money, you do something most people skip entirely. You study. You buy 2 books, Mark Douglas, Trading in the Zone, Van Tharp, Trade Your Way to Financial Freedom. Total cost, $42. You read both twice. You take notes in the margins. This is the first real investment you make in trading, not capital, knowledge. You open a free demo account on TradingView. You paper trade for 90 days straight. No real money. You track every single trade in a handwritten journal. Date, instrument, entry price, exit price, reason for entry, reason for exit, emotional state when you made the decision. In 90 days, you place 187 simulated trades. You review every single one. You find a pattern that changes everything. You exit your winners too early and you hold your losers too long. This is not a character flaw. Every trader in history has had this exact problem. Most never admit it. You write it on a piece of paper and tape it to your monitor. Month 10, you open a real account. $5,000 might saved over 4 months by cutting one expense category completely. Eating out, not forever, just long enough. You pick one strategy, swing trading on U.S. equities, holding positions for 2 to 5 days, not day trading by the minute. You have a full-time job. You cannot watch charts all day. Swing trading fits your life. You risk no more than 1% per trade. That is $50 at risk per trade. That number sounds embarrassingly small. It is the most important decision you make at this stage. You enroll in one structured course, not a $10,000 boot camp, a $297 swing trading course from a trader with verifiable results. You check his broker statements before buying. You spend 6 weeks on it like a university exam. Then you spend 3 months backtesting your strategy manually on historical charts, 100 setups, annotated, entry, stop loss, target, what the market actually did. You build a 1-page playbook, your exact setup and writing, your entry conditions, your risk rules, and the specific market conditions where you do not trade. You lose $600 in your first live month. You do not panic. You review every trade. The $600 is tuition. It is the cheapest tuition this school offers. Level 2 costs you $5,642 all in. Account, course, books, data fees. Level 2 earns you $0. What it actually gives you, 187 paper trades reviewed, a playbook, and the first honest picture of who you are as a trader. Most people never reach the end of level 2. They run out of patience before they run out of money. Level 3, the developing trader, age 29 to 31. Account, $4,000. Income from trading, first green months. Month 18. You blow your account, not gradually, in 1 week. 3 losing trades in a row, and something snaps. You abandon your playbook. You double your position size trying to get it back fast. You break every rule you wrote down. You lose $4,200 in 6 trading days. You sit with that for 2 weeks, not trading, just reading your journal. You find the exact entry where the emotion took over, the trade where the loss felt personal, where you stopped following a system and started fighting the market. You write a 2-page post-mortem, no excuses, just the sequence of decisions and the psychological state behind each one. This document is more valuable than the $4,200 you lost. You open a new account, $4,000. You add 1 rule to your playbook that was not there before, a maximum daily loss limit of 2%. When you hit it, the platform closes. Non-negotiable, no override. The day is done. Month 20, your first consistently green month. Net profit, $380. You do not celebrate. You review the trades. You notice 3 that worked, but where you almost broke the rules. That frightens you more than the losses did. A win built on a broken rule is a ticking clock. Month 22, $510 net. Month 24, $620 net. 3 consecutive profitable months. Controlled drawdowns. 0 rule violations. This is the threshold that matters, not the amount. The fact that it keeps happening. You now have something real, a documented, tested, rules-based approach that has shown positive expectancy across real market conditions, not in theory, in your actual account, with your actual money, in an actual market that tried to take it from you twice. Your account sits at $5,800. Your job still pays the bills. You have spent roughly $4,500 total on education since you started. You have earned back $1,500 in net profit. You are still behind financially, but you have an edge, a small one, a real one, yours. Now you need capital you do not have, and you are about to find a way to get it. Level 4, the funded trader age 31 to 33. Funded account, $100,000 to $200,000. First real income from trading. Month 30. You discover prop firms. Here's how they work. You pay a fee to take a challenge, an evaluation. You trade a demo account with strict rules. Hit a 10% profit target without breaching a 10% total drawdown or a 5% single day loss. If you pass, the firm gives you a funded account. Their simulated capital, your real payouts. You keep 80% to 90% of everything you generate. You never risk more than your challenge fee. FTMO is one of the most established. A $100,000 challenge costs $540. First attempt. You pass phase 1. You fail phase 2. A single oversized trade on a Friday before a weekend news event. You held through high impact news. You knew the rule. You broke it once. $540 gone. You take 1 month off. You review every trade from both phases. You find the exact moment you got careless. You add a rule to your playbook. No positions held into major scheduled news events. Second attempt, month 33. You pass both phases. You are now a funded trader. $100,000 account. 80% profit split. Month 34. First funded month. Simulated profit. $2,100. Your payout, $1,680 real money, wired to your bank account. You stare at that transfer notification for a long time. Month 36, payout, $2,240. Month 38, bad month. Market conditions do not match your setup. You take fewer trades than usual. You finish slightly negative, being minus $400 simulated. No payout. You do not force trades to recover. You accept the miss. That discipline cost you $0. It saves you the account. Month 40, you pass a second FTMO challenge. Total funded capital, $200,000. Monthly payouts start averaging $3,200 to $4,100. Month 42, you qualify for FTMO's scaling plan. Your account grows to $160,000 on the first account. Profit split moves to 90%. Over level 4, 18 months, your total prop firm payouts, roughly $38,000. Not life-changing yet, but consistent, real, and built entirely without risking catastrophic personal capital. The most you lost in any single event at this level, $540. That number is the architecture of the whole system. Total invested since month 0, roughly $7,200 in education and challenge fees. Total earned $38,000. You are net positive for the first time. Level 5. The full-time trader, age 33 to 34. Funded capital, $460,000. Monthly payouts, average $9,800. Month 48. You do the math. Trading income last 6 months average, $4,300 per month. Take home from your job after tax, $3,200 per month. Trading is paying you more than your employer. You do not quit immediately. You set a condition, 6 more consecutive months of profitable trading with 0 rule violations. You want proof, not hope. There is a difference. Month 54, 6 months, all profitable. Smallest, $2,900. Largest, $6,100. 0 rule violations. You hand in your notice. The first month trading full-time is the strangest month of your professional life. No salary, no direct deposit, no boss, no shared calendar, just you, 2 screens, and a market that does not care about your rent. Week 2 without a paycheck, you overtrade. Not dramatically, just 3 setups that do not fully meet your criteria. All 3 lose. You write about it that night. The entry in your journal is 1 word, fear. You recover. You tighten the rules. You add 1 more entry to your playbook. It says, if you feel urgency, do not trade. Month 56, you pass a $200,000 FTMO challenge. Total funded capital across 3 accounts, $460,000. At 90% split and a 4% average monthly return, your theoretical monthly income, $16,560. Reality is messier. Some months you hit 6%. Some months you hit 1.5%. Some months you hit your drawdown limit on day 4 and stop trading for the rest of the month. Every time you stop, you protect the account. Every time you protect the account, you stay in the game. Your daily routine is now fixed. Market prep, 8 to 9 a.m. Trade window, 9:30 to 11 a.m. Journal review, 4 p.m. Study, 1 concept, 1 chart review, 3 nights a week. Everything else is life. You exercise every day, not because of a productivity book, because you discovered in month 49 that on days you skip the gym, your trading is measurably worse. That observation is in your journal. You treat it like a trading rule. Average monthly payout across level 5 at $9,800. Month 72, you check the total. Cumulative gross payouts. Since month 33, $167,000. You need $33,000 more. Month 74, you cross $200,000. You are 34 years old. You have earned $200,000 as a professional trader, starting from 0 at 28. No finance degree, no lucky trade, no connections, just a free demo account, a $42 book, and 6 years of treating this like the most serious thing you have ever done. You open your trading journal to the first entry 6 years ago, the paper trade from day 1, the emotion you wrote next to a setup that did not work. You read it like a letter from a stranger. That person thought this would take 18 months. He thought emotion was a side issue. He thought the secret was finding the right tips. He was wrong about almost everything, and he kept going anyway. That is the only thing he got right. Here's the truth about every level. Level 1 will make you feel like a genius right before it takes your money. Level 2 is where most people quit, not from losses, but from boredom. Level 3 will break you once, maybe twice, and show you exactly who you are under pressure. Level 4 will give you your first real proof. Level 5 will test whether you can do this without a salary net underneath you. 72% of traders never make it past level 1. You just watch someone make it to level 5. The levels do not care how old you are. They do not care that you started at 28. They only care about one thing. Whether you showed up the next day, the market opens tomorrow. Which level are you on?